Good morning, everyone, and welcome to this edition of The Market. I'm Avan Dabash, and with me is Nikunj Dalmia. Well, let's just take stock of the market because we've been handed over some pretty range-bound cues from Wall Street. But other than that, 3 straight days on the trot that you've seen the index falling. So yesterday, 17,600, we did precious little as we were confined to a pretty tight range. And the biggest sore point in the market yesterday continued to remain the IT basket. Metals, they managed to buck the general trend, gaining for 9 straight days on the trot. And we've been talking about a secular trend as well playing out in the pharma space, and that clearly stood out as the Nifty Pharma index in particular held on to the 200 daily moving average. As I said, range bound when it comes to the global screen. That's the SGX Nifty as well, indicating a pretty muted start. Given the fact, Nikunj, that the FIIs as well continue to remain net sellers, although the quantum has reduced, DIIs as well net sellers, what are the critical levels to watch out for, and what does the market do from here on?
I think range bound is the word, and frankly a range bound movement, range bound setup for global markets and for Indian markets is frankly not a dire outcome. I think it's a great outcome. Markets are taking the time, markets, there is a wonderful sectoral rotation which is on. Mid and small cap stocks, with each passing day, the confidence to participate there, I guess, is evident. So the bearish narrative which had gripped Wall Street and Dalal Street, that bearish narrative clearly is behind us. Markets are no longer oversold. So to assume that the kind of rally what we've seen in the first week of April in the last 10 days, that is unlikely to continue. The way I see things panning out is that Nifty may just spend some time with a positive bias. The desire to participate in mid and small cap stocks, I think that is evident. The sectoral rotation is benefiting capital goods stocks, select auto stocks, and few banks. IT is in a back burner. So that really seems to be the construct of the market. But directionally, it is looking for a real way to participate in this market. I would say do not sell. If you bought at low levels, stay invested, and it's time to really treasure hunt in mid and small cap stock. It's not a time that where you want to book profits, whether it is on your trading positions or also in your investment portfolio.
Okay, so the fact that we're range bound, it's not a dire situation. That is a pretty good spot to be in at the current juncture. But earnings, that is the other big talking point in our markets. Day after day, we're being set out with a whole set of numbers. Yesterday, primarily a lot of mid-cap numbers, and that's just really how we're categorizing it. And you can see quite a bit of green on your screen in that report card, and that's largely on the back of the fact that you had healthy revenue growth for ICICI Sec. You've got ICICI Securities as well. That's had a mixed set of numbers. Tata Communications, though, that was rather weak in the fourth quarter, but it seems like maybe the margin pressure is now behind us. So just really assessing the quarterly numbers, and now the big one today, Nikunj, is going to be HCL Technologies.
Let's start with what do we have on the screen, and I'll start with the odd one out. When I say odd one out, Nasdaq. Strong Q4, healthy revenue visibility. Hello. Strong revenue growth, healthy revenue visibility. Now that is very different from what we've heard from TCS and what Infosys in a sense has indicated. Tata Communication, well, numbers are not that great, but is the worst behind the data business. The stock has seen a sell-off and a big powerful sell-off in the run-up to the numbers. The point I'm trying to bring out here is that not everything in IT is bad and not everything in IT is great. Similarly, at the current juncture, looking at these numbers, is there a trade in IT which is cut your shorts and go long? And I think that trade could be at play. First things first, I think Nasdaq will bounce back because of these numbers. Tata Com, in my book, it has already fallen. The downside gets restricted. In HCL Tech, I guess, becomes a completely different kettle of fish. So I'm just going to divert a bit here, and let's look at the 52-week change of HCL Tech. Compare that with Infosys. Look at where a TCS has done. And you will actually see a very big divergence there. Divergence in terms of the HCL Tech stock performance, what Infosys has done post numbers in terms of the positioning, and where TCS has moved post that. Now that's HCL Tech for you, down just 5% in the last 52 weeks. For Infosys, the chart is going to look very, very different, largely because of that big fall which happened on Monday. That's HCL Tech and TCS for you, and then we'll throw in TCS also in this just to compare. So the point I'm trying to say here is that it is not about IT, it is about individual companies. And this time around, the expectation of HCL Tech numbers have been quite diluted, even though it has been a ranked outperformer.
Okay, that's the view coming in. Yep, that's what the ET Now poll is expecting, that the dollar revenue growth could be tempered this time around at about $3,220 million. Profits are seen lower by just about 5% at 3,680 crore rupees. The cross-currency revenue growth, that could range from about -2 to about +1%. And we'll also be watching out for the EBIT margin impact on account of the seasonal decline in the high-margin P&P business. But that aside, then the spotlight will also be on Tata Motors within the auto space, as JLR has come out with their long-term plans. Some of the factors that they've highlighted is that they're really going to accelerate their plans in modern luxury electric, and they're going to invest close to a £15 billion to upscale their overall business. A slew of brokerages as well have come out with their take on Tata Motors. Macquarie has an overweight rating, Bank of America, well, they say that they have a buy call, and Morgan Stanley as well has an overweight rating with a target price at about 513. How, Nikunj, should the street really read into these plans for a JLR?
Avan, I think for Tata Motors, the worst is behind us, but the best is yet to come. I've been maintaining that for 2023, if you're looking at a dark horse from the auto space, it really could be Tata Motors. What Mahindra and Mahindra did, let's say in 2022 and 2021 and 22, I think you could see that kind of an outperformance by Tata Motors. Variety of factors which are at play. Now we're talking about the press release. So what has come out new in terms of the press release? They're talking about new product launches in the EV space, and they're looking at increasing the capex marginally. But if you're looking at increasing your capex marginally, which means you're looking at spending more, but you're still committing to the fact that you would be looking at a net zero net debt balance sheet in FY25 on an aggregate basis, FY26 for JLR. They're also talking about a double-digit EBITDA going forward, which means they are communicating pretty much what markets want to hear, that the deleverage cycle has started, and JLR will be looking at expanding in the EV space, and also margins would expand. The business of Tata Motors is such that operating leverage for a business like Tata Motors would kick in because they've got debt on their balance sheet. So could Tata Motors now be firing full cylinders? A, their domestic business is looking strong. They are number 2 player in the domestic passenger car market. CV is in a natural uptick. JLR business is getting sorted out, and the deleverage cycle has started. So I sincerely feel that after almost like a 1.5 year of no performance, Tata Motors could be the stock to watch. And you know, it's interesting, Avan, if one looks at the Tata Motors stock in the last 5-6 years, this stock in 5-6 years has not given you any kind of a return. Just look at the 5-year return, and I'm pretty, I'm pretty certain about that. In last 5 years, Tata Motors, that's Tata Motors yesterday for you. But last 5 years, Tata Motors as a stock, frankly, has given no returns. 40% in 5 years is nothing actually in my book, and this includes the recent bout of outperformance. So if you take out what they've done in April and let's say in late March, then the stock actually has been flat in last 5 years.
The only thing is, Nikunj, that this sort of pushes their net debt-free guidance, right, by about 7 to 8 months.
Yeah, but they're committing to it. I don't think, see, if you're committing to it and if you're giving and you speaking out the path to achieving that, which is that the Tata Motor subsidiary is going to go public. They are looking at further deleveraging, EBIT margins for JLR would improve, semiconductor device problem is getting sorted out. I think they would achieve it. What you need to understand is that for a business like Tata Motors, operating leverage is at play. Unlike a lot of the auto companies do not have an operating leverage, this company is a debt. So when operating leverage and financial leverage, they both kick in, then the meaningful repair in the balance sheet will always surprise us.
Okay, that's clearly the stock to look out for. But what about the global commentary as well coming in? Anisha is here with a summary of that. Anisha?
Well, overnight the beige book from Fed was out, and they are talking about that the economic situation has remained pretty much status quo. Inflation is still sticky as of now. The labor market is a bit less tighter than it was earlier, but then consumer prices continue to be at elevated levels. So not major directional cues coming in as far as the beige book is concerned. But if you listen into the commentary coming in from the Fed member Williams, he's talking about how inflation is still too high and the fact that Fed will continue to act to lower it going forward. He said that the US Central Bank will continue to act to lower it, and he also said that given the fact that the banking sector situation is a bit precarious, they will likely wait in while taking the decision as well. But overall, a bit more hawkish commentary coming in from the Fed member. Mohammed El Arian talked about the UK inflation figure that again came in hotter than expected at a double-digit growth. He says that this perhaps means that the Bank of England will have to continue rising, increasing rates as well, and that might complicate the ongoing wage negotiations as well. Lastly, also wanted to highlight the commentary coming in from Howard Marks. It's been a couple of days since he's put out his latest note on the contagion impact, if at all, what he's expecting from the Silicon Valley Bank debacle. But he says that the significance is less for the banking failure, but it's more for the sentiment coming in for the investors, because his take is that this would lead to further credit tightening and will cause additional pain across the range of industries and sector, and that would mean that it would amplify the pre-existing wariness among investors. So that's the word coming in from Howard Marks as well.
Okay, that's the commentary coming in from the global experts, but here's our local one, Saurabh Mukherjee, telling us why he likes Moltech as well as Poshmark.
Moltech packaging, leader in mold packaging. In mold packaging is the sort of packaging you see in high-end FMCG products. They are quality balls, ice cream bucket. So Asian Paints, Berger Paints use in mold packaging in their more premium paint offerings. And naturally, therefore, as the paint industry grows, as the premium end of FMCG grows, Moltech packaging is setting up plants alongside the big paint and big FMCG giants. So they have a niche in this. They're a leader in this. There's a specific technology advantage that they possess in mold packaging. We've interacted extensively with the management since we first bought a stake 4 years ago. We've seen the management raise its game on capital allocation, improve the technology, and we remain very convinced that there's a long-term future for this very interesting small cap company. Poshmark is a dominant player in phosgene. So phosgene is an essential industrial chemical, as essential as chlorine. Because this was the chemical at the heart of the Bhopal gas tragedy 40 years ago, it's a controlled substance. The government does not give out new licenses to make phosgene. Poshmark, therefore, is a quasi-monopoly. It tripled capacity through 2021. It tripled capacity through those years. And we bought it once we had visibility that the ROCs, the return on capital, had been slowed, had been compressed by the tripling of capacity. And we remain optimistic that as we come out of COVID, as the economy recovers, the incremental demand for phosgene will be met by Poshmark. Barring Poshmark, the only other large manufacturer of phosgene is a PSU, where I don't think the competition is going to be credible or sustainable in terms of a Poshmark versus PSU situation.
What should be the strategy? Now we've put almost a 800-point gain on the Nifty. Last 2-3 days we've stumbled here and there, but is this just a pause and we are likely to flourish from here? There is going to be an expiry pressure which would be at play, of course, for Bank Nifty. But in general, what should be the best strategy? Kunal, go long, stay long, don't cut longs.
Yeah, so all three of them.
Stay long.
Go long.
Go long as in
stay
buy
long.
fresh.
Yeah.
If you are long, stay fresh.
Yes.
And
Don't cut longs.
Don't cut longs.
All three of them.
Very simple. Markets अच्छा लग रहा है.
It looks good. So, the best part about the market is that all sectors are participating one by one, whether it's defensives, the so-called defensives like the pharma stocks, the FMCG stocks are individually making a very strong comeback. Look at what's happened to stocks like Nestle in the last, I think, 2 or 3 trading sessions. Very strong recovery. Large, the high beta sectors like real estates have done really well. Auto stocks, auto ancillary stocks, in fact, have actually done much better than the traditional large cap auto names. So sugar stocks have done reasonably well. So when you see these kind of sector participation, which tends to move, one by one, that's a sign of a trend which is getting into not a mature phase, but a trend which is getting, reactivated the market. So I think no complaints as such. The good part about the data yesterday was in the last 4-5 days we've seen actually unwinding of open interest on the Bank Nifty futures. For the first time yesterday, we saw some built up of long positions on the Bank Nifty. So I think even if it was a bit marginal, just 2%, 2.5% on the Bank Nifty, but still it tells you that possibly the mood is changing now from being a profit booking mode for the banking index to now possibly being a buy on dip. So encouraging data point across the spectrum, whether it's in terms of market breadth, sector participation, as well as in terms of open interest yesterday.
Dinesh, hi, morning. But unfortunate as it may be, pharma can't push the index higher the way one would want to, right? So what about banks, which has the highest weightage, or for that matter, individual names like Reliance ahead of their numbers on Friday?
So these are the two weights, which is basically banks and Reliance itself, which make it almost 45% of the index. Even in banks and financials, HDFC group itself is 15% plus. And now we are getting into the phase where we need to see whether there is a fresh momentum coming in Reliance and HDFC twins. That is where there should be a kicker. So we've seen a Kotak Mahindra Bank, which was silent for quite some time, see a 10% move over the last few sessions. So watching it out, overall Reliance holding on 2200, 2300 indicates does not want to break down. But HDFC Bank again has faltered around that 1700 mark from the result point. So going forward, once it crosses 1700, 1720, that is where a new trend starts for the group. So for now, we are in this zone wherein we get a range bound in the index, basically between 17,400 to 17,800. And all the results of the large cap should be out over the next, say, 8 trend sessions, majority of them. And then we get a clearer trend. So for now, the case is to buy on dips as closer to 17,500, 600 band and look for a move towards 17,000. So overall positive. Momentum is something which would lag for some time. But once we get more clarity in terms of some leadership from the heavyweights, then we can have a momentum beyond 17,800. So the bias is positive, buy on dips, but momentum could be some days away.
Let's find out what exactly those stock-specific strategies are as well in this earnings-heavy week. And Kunal, what are you identifying on the charts?
So I'm going a bit contra on large cap names to buy on Ultratech Cement and L&T. So Ultratech Cement was a stock which is down some 1.5-2% yesterday. So I'm expecting that the stock would probably have completed a phase of correction and is now come back towards a classic support point. So that's a buy. Targets of 7650, stop loss to be kept at 7,420. And L&T as well has come back towards a 5% retracement, touched back its 50-day moving average. Day before yesterday, the stock formed a classic bullish hammer pattern and managed to protect that day before yesterday's low for itself on a session like yesterday. So again, an indication that maybe bottom could be in place for L&T. That's a buy. Targets of 2,300, stop loss at 2,190.
All right, looking at some of the large caps in trade. Meantime, what's your strategy then, Naresh?
So first would be a buy on Axis Bank. The stock has been holding on and setting up for a move above that 870-75 mark. Relative strength over the last couple of sessions finally. A lot of catch up to be done with the rest of the banking names. So looks set for a move towards 900, 920 in the short term. A strict stop loss at 860. Second is a buy on Balrampur Chini, which has spent quite a lot of time around this 400, 420 mark. And a multiple base made at 320 levels. And if you look at the sugar prices, sugar spot prices globally, they've broken out into a big move. So the whole sugar sector looks interesting. Today, Balrampur Chini should mostly be out of the derivative band. So that's also a chance which can create some more momentum. So out here, a buy at current levels as well as on dip, stop loss at 400 and a target price of 460 plus.
Buy calls coming in from Naresh as well as Kunal. But before we move forward and tell you all about the stocks which are going to be in news and focus today, let's hear our Devina Mehra from First Global. She's pretty overweight on industrials as well as capital goods, as she says that stocks from these sectors have already doubled and tripled from last year, and she sees more potential.
We have been very positive on industrial and capital goods for now over a year and a half, so from October 2021, and that's been a big performer for us because stocks have doubled and tripled also. And we still remain overweight, though. I mean, we've been booking profits. So last quarter also we cut a bit. This quarter also we cut a bit, but relative to the index, we are still way overweight. So that's a sector that we continue to like. We've done some reshuffling also, moved from something where it looked like the move was over to something else, but that sector we remain positive.
All right, that's the view coming in from Devina Mehra. But let's get a move on as we're talking about Tata Motors as well is going to be in the spotlight. Do remember JLR announced that 15 billion pound investment to ramp up their businesses over the next 5 years. They've also aimed to improve the industrial footprint, vehicle programs and autonomous AI as well as digital technologies. Shrishti Sharma is here with the details. Shrishti?
Well, yes, rightly said that one of the big investments by JLR till date, and after JLR was acquired by Tata's, you are seeing such a big announcement coming in probably for the first time, and this time JLR plans to invest around 1.5 lakh crores in Indian rupees. That is actually 15 billion pounds over the next 5 years, and this particular money is on the plans to accelerate their modern luxury electric first future, and they plan to invest that in industrial footprint, expanding their vehicle programs, autonomous AI and digital technologies, as well as investment in people skills as well. So this is one of the big announcements coming in from JLR, as well as if we talk about some of the other highlights in this particular release is that they say that JLR's Halewood plant in UK will become an all-electric manufacturing facility, and going ahead as JLR continues to focus on their electric portfolio, they also say that JLR, in terms of their reimagined strategy going ahead with that, their next generation medium size SUV architecture will be pure electric. The pre-orders will open for their first all-electric Range Rover later this year, and going ahead maybe in 2025 they will start the bookings of this particular car. And they also said that the upcoming cars will be more in terms of the range, and they have also given an indicative price. And they on to the financials, given such a big investment coming in from JLR as well as Tata Motors, they continue to remain focused on their future guidance in terms of financials. They plan to be net cash positive position by FY25 and double-digit EBIT to be reached by 2026. So given a fact that such a big investment is coming up, they continue to stick with their financial guidance as well. So definitely a big announcement by JLR. Back to you.
Right, that's going to be the stock to look out for. And before we move forward, Kunal, just a quick take on Tata Motors. You've always been bullish on this one, and now this trigger which could clearly, push the stock even higher.
I think it's going to be a good advantage for Tata Motors. The stock was just, the breakout was pending for the stock price since quite some time, and the stock consolidated for almost 2 years. 2021, I think October, November is where the stock went into this tight range of consolidation. So I think it's going to be a good sign, with the breakout potentially coming in for Tata Motors. And my sense is that this may not just be a short-lived breakout, but this could be a huge breakout which may last for many years to come for Tata Motors. So traders who have missed out on the stock price earlier could look to buy the stock even at current levels. It's just that your time horizon should not be short-term, but it has to be considerably medium to long-term.
Okay, keep a medium to long-term time frame on Tata Motors in good stead. Let's discuss this forward. We have Vasudev Banerjee as well joining in on the show right now to talk about what he's making of this latest development on Tata Motors. Vasudev, hi, good morning. Thanks so much for taking the time out. Vasudev, a 15 billion pound investment equating to about a sizable sum over the next 5 years, which is actually higher than what the company had planned for their reimagined strategy earlier, right? Which was only 2.5 billion pound. How is it that you're seeing this massive upscale of capex?
So one can take it in two ways. One is Street was so negative when they reduced their capex per outlook of £3.5 billion to £2.5 billion, saying that because of cash flow crunch, company has reduced capex outlook, so that is not a good step. And they are forced to restrict their EV-related R&D program because of this restricted capex. Now the reversal was bound to happen with things improving, and that has happened, and I'm not at all surprised. In fact, they were planning 3.5 billion per annum capex 3 years back. Post that, this reduction has happened. So now it is one step ahead from 2.5 to 3. And if you look at in last 3 years, their product mix have changed quite a lot. Realization levels have improved from £50,000 to almost £75,000 a unit. And that is giving them the conviction that, yes, annualized revenue of £25 billion plus is now sustainable. And correspondingly, annualized free cash flow of somewhere around $1.5 billion is doable. Under that situation, increasing capex outlook by £500 million is only giving outlook for a better portfolio, enriched portfolio, and which can compete with the peer set well, rather than giving a negative outlook of a restricted free cash flow.
But Basudeb, does it at all increase debt concerns for JLR? Because they've already pushed their net debt-free guidance by about 7 to 8 months, right?
Yeah, so near-term FCF guidance doesn't matter. It's a 5-year-old plan, and it can be back-ended also, not necessarily it should start from fiscal 24 itself. It is the intent and focus towards EVs, and implying that financially the business is in a position to invest towards EV of that quantum rather than any near-term implication.
Do you think, that the street will also closely now be watching, the margin, the FCF delivery, and that is going to be critical to fix the undervaluation of JLR?
See, this thing called undervaluation, overvaluation, as you know that the peer set of JLR anyways trade at valuation multiples of sub 2 times EV EBITDA. So if you put that, then it's a different picture altogether. But it is all about continuity and improvement of free cash flow generation that people will, the street will definitely have a look at. Now, the main question is whether this £500 million increase will impact potential free cash flow generation and reduce the estimates of the FCF numbers for FY25. If not, then definitely that's a positive step for a long-term portfolio creation and not near-term FCF destruction.
Clearly outlined their plans to focus on electric now, with one plant being dedicated solely to that. So how are you looking at JLR really gaining ground here? Because globally also we've seen a lot of competition stiffening over here.
The competition from a hatchback sedan segment going electric does not matter much. From JLR perspective, it is more to do with the traditional peers of BMW, Mercedes, Audi, etc. And if you look at overall Europe, electrification is somewhere around 10% and outlook is 30-35% by end of CY30. And Jaguar is going all electric by CY35. So it is between CY26 to CY30. The Land Rover portfolio electrification is the key. And currently see that e-tron series, EQ series, various launches happening. So accelerating their launch pipeline for Land Rover is a requirement, and I am sure company will look forward towards doing that. And in yesterday's press release already mentioned that the Land Rover all-electric model order booking will start somewhere in end of this calendar year. So there's no mentioning of the launch timing, but at least something is also going to happen towards electrification of Land Rover sooner than later. So that's a positive development.
Have you upped your price targets already?
As I said, we were already building £3.5 billion of overall JLR capex for FY 25-26 onwards in our estimates. So there's no change to our numbers per se.
Great. We'll look out for the reaction in the stock this morning. Basudev, good to have you on the show. Thank you so much for taking the time out. Well, tech major HCL Technologies is also set to report its Q4 numbers. Anisha is here to tell us what the street is estimating. Anisha?
Well, the expectations are muted given the fact that the company had lowered the guidance earlier as well, and that implied that growth this quarter could be a potential decline to the tune of 1.4% to a flat performance as far as constant currency is concerned, and that's the reason the dollar revenue is expected to be just around that $3,220 million mark. Margin picture is also looking bleak, a decline of 140 basis points sequentially, but that's on account of the seasonal PNP business. It's rather strong in Q3 and it slows down in Q4. So that's the reason the margin is expected to dip by around 140 basis points. And of course, the operating leverage is also missing this time around. Consequently, the profitability is expected to dip by around 5%. Even if you look at the deal win momentum, it hasn't been very strong. So the street is factoring that maybe on a year-on-year basis, there could be a decline of around 5 to 10% when it comes to the deal wins as well. But going forward, the most important thing to watch out for really is the management commentary, and the guidance regarding FY24 will really hold the key. A lot of brokerages earlier were expecting a growth profile of 6 to 8% for FY24, but given the disappointment from Infosys, that has been tempered down, and the street will now be okay with even 5 to 7%. Let's see whether they manage to deliver that or not. And the EBIT guidance is expected to be around 18 to 20%. Separately, the management commentary regarding the PNP business will be important. What are the hiring plans for FY24 is also crucial to watch out for. So with IT companies this time, of course, commentary is the most important thing to watch.
Thanks very much, Anisha, for giving us those details. And those are a lot of the critical factors that the street will closely be watching out for when it comes to HCL Technologies. Let's move right on then to an ET Now exclusive. And sources tell us that the Reserve Bank has called a meeting with the Board of Directors of banks on the 29th of May and is likely to discuss issues that are related to governance and ethics. Let's understand a little bit more about the agenda. We've got Ankur, my colleague, joining in with that perspective. Ankur, morning.
Yes, sources say that an important meeting has been called by Reserve Bank of India with banks, and this time this meeting is not only with bank chiefs but board of directors of banks have been invited for the meeting. Now this will be first time that this kind of meeting will be held at Reserve Bank of India, and who will be the part of the meeting? We have been told that Reserve Bank of India governor, deputy governors, as well as some of the executive directors of Reserve Bank of India will be part of meeting, and the departments which may participate in the meeting includes Department of Supervision and Departments of Regulation and Enforcement Department, among others. As far as the agenda of meeting is concerned, what we learn is that till now the agenda has not been circulated with the banks. What sources have indicated is that issues related to ethics, issues related to governance are likely to be discussed in the meeting. Remember, way back in 2020, there was a discussion paper which was released by Reserve Bank of India on these issues. And the idea was to align Indian banks with global best practices. So we learned that these issues are likely to be discussed in the meeting which is going to be held on May 29. Now it will be interesting to see what inputs even banks gives based on their experiences to Reserve Bank of India in this meeting.
And well, after Mumbai, New Delhi is now set to say hello to Apple. India's second Apple retail store is set to open to public. Remember, Apple CEO Tim Cook met the Prime Minister just last evening, who says that India is witnessing a tech-powered transformation. Meanwhile, Tim Cook also met Deputy IT Minister Rajiv Chandrasekhar, and sources say Cook also promised more jobs in India in his meeting with the IT Minister Ashwini Vaishnaw. In fact, both my colleagues Sumita Karir and Bhavya Dua are there to give us a mood check outside the New Delhi Apple store, which I believe is going to open at 10 a.m. But Sumita, if I could come to you first, Mumbai clearly was a very energetic welcome to Tim Cook. You think Delhi can match up to that?
Well, we are totally expecting that to happen as far as the Delhi Saket store is concerned. And I'm going to show you and pan across all of these people who've come from various parts of India. Some have come from Rajasthan, Chennai, Bangalore, all to catch a glimpse of the newly opened Apple store, which was opened for media preview yesterday, and they're hoping to meet Tim Cook as well and show their devices. In fact, we've met some very, very interesting Apple fans who've got their very first Apple devices as well. Some of them were even at the Bombay opening store in BKC, and those people have come up here again. Some people who were waiting since last evening, 7 p.m., just to catch a glimpse, just to be the first ones to enter the store. So the excitement is building up. Bombay, yes, the Bombay store was huge. It was humongous as compared to the Delhi store because we did catch a glimpse. And Bhavya is also here. Bhavya, this is going to be your first assignment, and that happens to be Apple's second retail store opening in Delhi.
Yeah, I'm quite excited to see that around, to see people flying from Punjab, parts of Rajasthan, Madhya Pradesh, Bangalore. There were people who had flown to Mumbai and are here now with their first Apple products, which was a Macintosh or an iPod. So it's really exciting to see that, and me being an Apple user myself, having an Apple entire ecosystem myself, it's really exciting to see. And all eyes at Tim Cook at 10 a.m. So how was the sentiment like? You were here for the media preview yesterday, right? So how is the ambience like of the store?
You know, the ambience of the store really, so like I was saying earlier, the Bombay store was humongous. It had like a top-down glass ceiling, and you know, the expanse of the store was unmatchable, something like you'd see when you travel abroad. However, Delhi stores and of course Indian stores have a bit of color to them, keeping the localization aspect that Apple has been keeping in mind for now. In fact, when I visited the Apple store here, it also compares to any other global Apple store as well. They had a whole host of Apple products, new and old, and of course we were introduced to the lovely Apple staff as well, and of course they had like a special delivery counter which basically shows Apple's commitment to online sales on its online customers as well. So they can place an order and they can collect it anytime right here. So Apple is basically trying to create a community of creative people, a community of Apple enthusiasts, which is why you've seen Tim Cook actually going and meeting musicians. He's meeting Bollywood stars as well. Of course, he had meetings with the Prime Minister, the Government of India officials as well yesterday. And he also visited the Delhi Art District. So the focus is really on creating a whole new community for Apple as far as India is concerned. And of course, it also marks Apple's, relationship, a new beginning for Apple's relationship with India as India also focuses on manufacturing in India. Manufacturing in India, not just for India, but for the world as well. It's also coming in at a time when India is hosting its G20 presidency. So the optics are great. I'm hoping more people to come in, and, I'm also hoping to catch a glimpse of Tim Cook.
Yeah, same here. I think the whole mall is going to be crowded, filled with lots of people, and everyone is meeting and hoping to meet Tim Cook at 10 a.m. as well.
Right.
Bhavya, thank you so much. And while it might not match up to the 20,000 square foot store in Mumbai, there's certainly going to be a lot of fervor and a lot of excitement in New Delhi as well. And we'll be.
Bombay has a bigger store.
Yeah,
I was thinking Delhi is going to be like
massive.
huge.
I was hoping it would be like one big store, not inside.
Standalone,
Exactly.
not in a mall.
Hello,
Surprising.
Apple. You're known for your stores.
Yeah.
The Bombay store has been, the Bombay store in a sense has set the watermark high.
Yeah.
But Delhi store,
Right now, Fika.
yeah.
But it's okay. A lot of people, as Sumita said, have already traveled from Mumbai and now gone to Delhi for the store opening as well. So we'll be keeping you up to speed with all the latest developments on that front. Quick break. Be right back. All right, let's find out then which are some of the stocks that are on the editor's radar today, and both result candidates, absolutely no surprises for that. Let's find out what Mastech is and how the street really should read into the kind of quarterly performance that the company delivered yesterday. Incidentally came out post-market hours. Well. And Nikunj, given that the street was closely eyeing this one as well, if we could just pop up the numbers for you on the screens. You did have the company deliver revenue growth of about 5.3% sequentially, and even the commentary was quite positive.
Growth, IT. Point here is that what Mastech has reported is not really applicable for the sector per se. Remember this this line which we've used, that there was a time when Infosys would sneeze and markets would catch a flu. I think that's not happening for the IT sector. Now, everyone thought that TCS bad numbers, Infosys terrible numbers, which means IT is bombed out. That's not the story. Mastech, not big in terms of size, but important in terms of the HNI investors who've invested in it. B, it's a company which has a very large focus in UK. So for me, comeback in Mastech is also an indication that UK is coming back, and companies which have a large exposure to Europe, I think they should start stabilizing. So you should expect a pop back in Mastech because the outlook for IT is bad, poor, terrible, horrible. And when a company which delivers when the outlook is bad, horrible, terrible, I guess the stock in the near term obviously will start outperforming. So two things here, Mastech, good numbers. UK and Europe problems are getting sorted. The stock should pop up today, or there could be a gap up start. But more importantly for me, is it like a canary in a coal mine, which is indicating that worst of the UK and the Europe business is behind us? So the buzzword here is watch out for companies which get a large business from Europe and UK. Has this business stabilized?
Okay, so that's interesting that Mastech did not fall prey to all of the concerns that some of the other IT majors that have come out with their numbers have. So this is going to be one to watch out for. The other one, Tata Communications as well, came out with its quarterly numbers yesterday post-market, as in the street was eyeing this one fairly closely as well. So important to monitor what they actually went ahead and delivered. It was muted in terms of the performance. How should the street read into it?
Yeah, so numbers are not impressive at all. And this is what amazes me about a business like Tata Com, that why is there so much of linearity in a business, in a company which in a sense is linked with the entire data binge in the world. Maybe the business model is taking some more time really to adapt to the change in the mix in terms of voice as per as data. The interesting bit here is that most of the brokerages are saying that the worst is behind Tata Com, and the stock in the run-up to the numbers in this week has already fallen by about 100 rupees. The con call is at 230. So a large part of reaction could only happen after the con call because it's an institutional dominated stock. But I would imagine that based on these numbers also, the downside for Tata Com may not be large given the fact that A, it's cheap, B, everybody knew that numbers would be bad, C, the stock has seen a crack of almost 100 rupees in just last couple of trading sessions.
Okay, let's also get in Hemang Jani's take then. Hemang, how have you read into Tata Communications numbers? Muted at best?
Yeah, so is that the performance has been a little disappointing, and the point is that when you have a digital based business model and the overall earnings picture is not showing any kind of a consistency, people would have a little bit of discomfort. Anyway, the overall outlook is slightly clouded because of the way the entire IT sector flow is around us. So we think that only from a dividend yield perspective, maybe some of the stocks could make sense, but overall in terms of earnings quality and the linearity, it is not making too much of sense.
What is making sense according to you then? What are you buying? What are you selling?
Yeah, so Nikunj, my take on the market is that the Nifty is unlikely to show any meaningful upside, and the reason being that the Reliance has its own sort of issues. Okay, the GRMs are on a weaker side. IT, we all know that there are some issues. It may not correct much, but I do not see any positive triggers, at least in the near term. Also, some of the numbers from heavyweight like Maruti, and few others may not be that big. So Nifty, I do not see a case for a big upside. The only pocket which is holding out well is to some extent banking, pharma, and a little bit of specialty chemicals. So I think it would make sense to go with some of these sectors, certain banks, particularly where the numbers are likely to be good, be it ICICI Bank, SBI, specialty chemical, because of the China reopen, you're seeing some good positive traction. So Navin Fluorine is something that should do pretty okay. Pharma, after almost about 5 quarters, is showing a bit of a resilience. You'll see a 8-9% growth. A big IPO is being launched, after a long time. So I think pharma as a sector should do well, and we like maybe Cipla, Alchem. So I think these are the pockets where we would have a positive view.
That's interesting, flagging off a plethora of sectors and stocks that look promising. That's the view coming in from Hemang. We'll get in lots more stocks as well, but let's focus in on Alcoa. It's the largest US-based aluminium producer, and they declared their Q1 numbers with revenues flat in the quarter gone by. Adjusted EBITDA saw an uptick. Let's understand a little bit more from the earnings. We've got Ashesha who joins in.
Well, yes, aluminium stocks the likes of Hindalco, Nalco, Vedanta will be in focus today, and that is because Alcoa, which is the largest US-based aluminium producer, reported its first quarter numbers. Numbers on a sequential basis look pretty good, although they were a tad below what the street was working with. As far as revenue is concerned, it has been flat on a quarter-on-quarter basis, and that is because higher realizations were offset by lower shipments this quarter. As far as loss is concerned, that has narrowed. Company has reported loss per share of about $1.3 per share versus 2.2 that the company had reported in the previous quarter. As I mentioned, realizations were on the higher side this quarter. Alumina as well as aluminium realizations rose anywhere between 7 to 8% on a quarter-on-quarter basis, but shipments declined by about 13% on a QOQ basis, and that is the result. Reason revenues have been rather flat on a sequential basis. But the outlook remains important for Indian aluminium players. They say that they have kept their 2023 shipment guidance unchanged, and they believe that the next quarter will be pretty good. Higher volumes, lower cost of production, and higher realizations will aid second quarter results, and that is why aluminium stocks will be in focus today.
Okay. Duresh, there is no conclusive trend in metals. Why is that?
So we had a huge cycle in metals before, and we generally have this case wherein once the cycle is over, we get into a period of maybe even years for the next cycle to play out. So if you go back to, so the classical way to look at it is all of these metal names. We've seen Tata Steel go up from 2015 to 17, then continue to drift for the next 3 years. Same thing happened between 15 to 16. So overall, the last cycle is done. It got done in 2021, say mid to end of it. And since then, we are in a very, say, consolidation for the last 2 years or a downward cycle. So the trend would be difficult to come in. It could keep seeing those bounces wherein there will be some bounce of 15% bump up, and then again the stock goes sideways. The only way to play metals is to start looking at stocks which have outperformed in the last this down cycle. And that is where you keep watching out for a JSW Steel or a Jindal Steel, which starts showing price action. What is interesting is if you look at all value-added metals in the small caps, which is a level up from steels have been doing well. So whether it's a Vardhman, Specialty Steel, Jindal Stainless Steel, a lot of these stocks are actually hitting 52-week highs, all-time highs. So ideally, one should be going beyond metals and look at the next level of metals, which is where there is a lot of value add.
Pipe companies. I mean, what a fantastic Wednesday afternoon it was for some of the pipe companies. Hemang, Maharashtra Seamless, Jindal Saw, APL Apollo. That entire space is making a comeback. Now, this has been a massive wealth creator. Names like Apollo, APL Apollo have really created a lot of shareholder wealth. Is there still some more juice left?
I definitely think so, Nikunj, because when we look at some of these pipe companies, particularly APL Apollo Tubes, and even smaller company like Ratnamani Metals, I think last 2 or 3 quarter numbers have been pretty good, both in terms of volumes and in terms of price. And we think that this is one structural story that one can really look at, where you are going to see a decent growth on the volume side, the kind of momentum that you are seeing both on the residential side as well as on the other category is definitely looking quite good. And the fact is that the mid caps and the small caps, because these pipe companies are typically not large cap ones, that presents a great opportunity because the sector practically has gone nowhere. So these two names, we have a very positive outlook.
Take in particular, Hemang, when it comes to Mastech and the kind of numbers that the company delivered, very strong after 2 to 3 quarters of disappointment, and after the fact that we had, Infi as well as TCS laying out a fairly dismal number.
So definitely, I think, it's a silver lining, so to speak, in a sector which is so bombed out by the kind of numbers that Infi delivered and the outlook, that many companies have. But 2 things I would like to highlight here, Avan. Of course, Mastech, the performance was very good quarter-on-quarter basis. Also, we have to reckon that IBM yesterday reported numbers, and the numbers as well as commentary was not as bad as what Infi delivered, and the guidance also IBM has moved to about 6 to 8%. So I think these are the things which are relatively positive, and we think that the IT as a sector has reached a value zone now. When it will start moving up or when we would see positive news flow, that's a matter of time. But I think incrementally these things are indicating to the positivity, in terms of a sector which is bombed out completely.
Okay, fair enough. That's the outlook coming in on Mastech. But Naresh, let's get in your view. Mid-cap IT, how have you seen some of those stocks trending this entire week? Is there anything that stands out on the charts?
So a lot of stocks were looking up for a bounce, did not play out. Very small stop losses got triggered, and then the move has continued on the downside. It's become tough to trade the IT pack because you have very different chart patterns across the board. So, say just a couple of days back, we saw Cyient making a new 52-week high, and then you have some smaller companies hitting a new 52-week low. So out there, not really taking a call, waiting for the whole large cap IT results to get done with, and then maybe watch out for a trend. Maybe a sharper correction is where you want to get into it. So for now, the risk reward is not favorable because a single result leads to a 5% downtick on the IT pack. So for now, totally avoiding the space.
Right, steer clear when it comes to IT, according to Naresh. What are the top fundamental stock ideas? Let's hear out what some of our top experts like Dipan Mehta are betting on.
I think in pharmaceutical space, one has to be extremely selective, and even large export-oriented businesses, we are seeing a lot of variance in their performance. And some companies are doing exceptionally well depending upon their product mix and target market, and others are still languishing. And end of the day, it is a complicated industry to analyze, study, and invest in. As a thumb rule, as I said, I think we prefer domestic-oriented businesses. But on the whole, I would like to remain equal to underweight within the pharma space. Maybe one or two companies which come to mind, which are the market leaders, have been solid performers like Sun Pharma. Really appreciate their strategy of moving up the value chain into specialty products. That will, make them stand apart from the rest of the crowd. And I think Divi's Lab may have seen a turnaround over there. It's exceptional manufacturing company with a very strong value proposition. And the custom synthesis business may have had a couple of soft quarters because of which we saw the correction the way we did. But the long-term prospects of that are phenomenal, and it's an India advantage company. So I think when the chips are down, you want to invest in a great long-term story, then Divi's Lab kind of meets that criteria. Apart from that, I think broadly we'd like to remain, as I said, underweight. It's a very complicated industry, and there could be a lot of volatility in earnings as well.
Hemang, Aisha, HPCL, very traditional names are making a comeback. Let's start with HPCL. Divestment is not going to happen in BPCL, which means the sector is unlikely to see any kind of a re-rating. What is driving HPCL? Periodically, we see these bouts of excitement in a stock like HPCL.
So I think, Nikunj, when you see the crude prices go down and you see some improvement on the marketing margins front, also the government kind of infused a fair bit of liquidity very recently in these names. So at some point, either from a dividend yield perspective or when you see the crude prices go down, some people get a little positive on it. And recently, if you also have noticed, the GRMs have actually corrected. Singapore complex GRMs and the standalone refiners would have some negative implications. So I think overall we continue to have a neutral view on the sector, but IOC is something that we've been liking because it is a fair share of both the refining, the marketing, and has its own pipeline network and a dividend yield of more than about 4.5% to 5%. So this is the one stock that we like from that perspective.
Hemang, wanted to ask you about what you're making of this latest news from JLR, the capex expansion to now £15 billion. And this is like, so much higher than the earlier indication.
Absolutely. I think it's a very big news from a JLR perspective. And our takeaway from this entire news is that the management is to its EV foray with more infusion, more models, and a new architecture that the company is looking to build. In terms of the total capex that they have announced, it is pretty much in line with our expectations, and they have also said that they will maintain a net zero debt status, and the double-digit EBIT margins for FY26 is a big positive because the market consensus was not that kind of a margin. The consensus was about 5.9%, and what they are saying is much higher than that. So we do think that Tata Motors would have a positive rub-off because of these developments.
469 is where the stock shut shop in yesterday's session. A lot of other stocks as well, which are going to be in focus this morning. And Ultratech Cement, they've commissioned a 2.2 MTPA brownfield expansion in Patlipura in Bihar. There's Aurobindo Pharma as well, which has got the US FDA for roflumilast. It's used for a pulmonary disease treatment. There's Mastec, of course, which has come out with its earnings, but in the constant currency revenue has come in higher by 5.3%, and there's been a margin expansion of about almost 40 basis points on a sequential basis. There's NBCC as well. They've bagged a project worth about 208 odd crore rupees from PWD in Puducherry. So that's another stock which is in focus as well. Kunal, often late, the likes of NBCC, NCC, these kind of construction engineering names, and I'm keeping L&T completely outside of this basket, they're all propping up quite well. Any trading opportunity here?
So NCC is attractive. That's a stock which I think has done reasonably well. In fact, in the last 4 months, when the markets went into a correction, NCC managed to do pretty, fairly good for itself from 77, 78 levels. It moved on to 90 plus, then from 90 to 100 plus levels. So it was a very slow, gradual transition for NCC, moving out of its major resistances to now into that 3-digit mark. And again, even at current levels of 100 plus levels, the stock is taking its own time to try and consolidate and show those staggered up moves. So that's an indication that it's not moving up in a hurry. So there is no euphoria which is attached towards the stock price, and that's where the trends can typically last for such stocks. I'm not sure of NBCC because I think after that fantastic uptrend in the second half of 2022, somehow when these stocks have corrected by 30 to 40%, they have come back to an attractive point of buy, but then the trends have not been very, very sharp as well as on the upside for these stocks. So I think out of the lot, NCC is something which looks attractive. L&T, of course, something which I flagged off early in the morning as well.
Okay, that's interesting. We'll also be watching out for NBCC on the back of an order win. Meantime, Kunal, you also had some of those rice stocks yesterday that were very active, news-based, but how are the charts looking?
Yeah, so out of them, I track a couple of the stocks. L&T Foods, the NSE code Dawat. That's a stock which has looked fairly attractive. Yesterday, I think the stock closed at 104, 105 plus mark. Again, with strong breakout potential over the near term. KRBL is something which also looks extremely attractive on the charts, and more attractive for KRBL is the consistency of price uptrend. So you look at the stock over the last 2 years, 3 years, 5 years plus kind of a time horizon. The stock has done consistently well, managed to absorb those phases of volatility, went through time-wise correction, and then whenever the stock gets into a breakout mode, it starts off a new trend for itself. So I think both these stocks from the rice pack look attractive.
Right. Hemang, just leave us with 1 or 2 stock ideas where you have a buy call at Motilal Oswal.
So, Aisha, recently we have upgraded the realty sector. So, Godrej property is something that we like, and we think that though the business traction was very good, somewhere the corrected by almost about 40% because the profitability had its own toll. And recently, when the interest rates started inching up by more than, let's say, 225 basis points, people had their own doubts about how sustainable this entire real estate story will be. But now that there is a pause and the overall guidance from the management continues to be very good in terms of what they will deliver with a focus on profitability. So that is something that we like. And apart from that, the NBFC space, I think, would have a positive rub-off of this entire, rate pause. So something like Poonawalla FinCorp, M&M Financials, I think these stocks should do well, because of the fact that the interest rate environment is going to be far more favorable.
All right, thanks very much, Hemang, for taking time out and joining in, giving us your top stock and sectoral themes. Let's get in a handle as to what the strategies are when it comes to the mid-caps from our charters. Kunal, your mid-cap call?
So it's from the fertilizer pack. Korum Fertilizer yesterday managed to eke out a breakout about the 940, 950 mark. Classic flag pattern being formed on the daily time frame, so would suggest a buy. 970 as a potential near-term target. Stop loss could be kept at 933.
Right. Naresh, what about your stock ideas?
It would be a buy on Lemon Tree. The stock has broken out clearly over the last two sessions, well above the 80 mark now. Good enough base made. A short-term breakout, setting up for a move towards a new all-time high, and the whole hotel space looks interesting. Covered Indian hotels before, now Lemon Tree and others are also breaking out. A stop loss at 79 and a target price of 100.
Okay, that's some of the stock ideas coming in from both Kunal as well as Naresh. But the month of March has seen some new shareholding updates coming in for names such as Garware High-Tech Films, Aditya Vision, Stylem Industries, which investors and firms have shown interest in the stake of these companies. Sharad is here with that cover.
Well, yes, we're having Garware High-Tech Films. It's a small cap stock, but ace investor Ashish Kacholia has actually increased his stake from 4% to almost by 17 basis points to 4.17%. Now, looking at the key triggers going ahead for the company, this includes that the lamination facilities that is expected to drive up the revenues over the next 2 years itself, and also there's an important trigger is the demand improvement, which is expected to come in the second half of this calendar year, and especially for the markets in the US and the European markets. Apart from this, the second stock actually has come with a new entry, and that is Aditya Vision. It was recently listed also, and now Ashish Kacholia is having at least 1.1% stake in the company as per the shareholding pattern. And do remember, the company itself is having more than 50% market share in the state of Bihar, and going ahead, the triggers, the management had spoken to ET now, and that stated that they'll be making systematic entries in the states of UP, Chhattisgarh, MP and West Bengal. And they're expecting at least 80 store additions in the next few years. The third stock we'll have in focus is Stylem Industries. And do remember, Abacus Group has actually increased their stake by almost 11 basis points to almost 2.5% for the March quarter itself. And this is India's fastest growing laminates company over the last 6 years itself. And the brokerages expect that the top line numbers, the bottom line numbers are expected to go up more than 25% at least over the next 2 years. And also do remember that a large capex portion has been already done behind, so you can expect operational leverages to kick in, which will actually drive the margins forward. So these three stocks would be in focus today as two astute investors increase their stake.
Right, thanks very much, Sharad, for giving us those details. Let's also run you through some of the other top stories that we're tracking. And Tesla has missed Wall Street expectations in Q1. Price cuts clearly weighed on their margins. There was a sharp decline in the gross margins from 29.1% to 19.3%. Do remember, Tesla went ahead and cut prices worldwide on their EVs, including in the US, where they recently cut prices for the 6th time this year amid rising competition. And US banking giant Morgan Stanley has topped the analyst expectations in the first quarter despite a decline in profits. They delivered a 19% decline in earnings. Revenues slipped 2% to $14.5 billion. And you had expenses as well that climbed on account of the higher than expected compensation costs. Now, according to Meta's latest round of job cuts that were announced in March, the company has started laying off employees in technical roles that range from the likes of software, engineering to graphics programming. Some of the layoffs have impacted the company's product-facing teams as well, and going forward, they plan to continue with these layoffs next month.
And more than 80 people have lost their lives and hundreds injured in war-torn country of Yemen after a charity distribution event sparked off one of the deadliest stampedes in about a decade's time. The tragedy came days ahead of the holy event of Eid, which marks the end of the holy month of Ramadan. Also, P.K. Mishra, Principal Secretary to Prime Minister, chaired a high-level committee meeting to assess COVID-19 situation in the country with focus on status of preparedness of health infrastructure and logistics, drugs, vaccination, and the key necessary steps as a response to recent surge in COVID-19 cases. And a rare celestial event is taking place currently at this moment. That is year 2023's first solar eclipse, which will be visible till 12:29 p.m. It is fully visible, though, in Western Australia and Indonesia, while partially seen in Southeast Asia, New Zealand, and some other nations as well. It is a hybrid eclipse, which is a combination of two types of solar eclipses, and it is a 1 in 10 years event. Next one is slated for 2031, but unfortunately, we won't be able to see it in India here.
Unfortunately, we won't, but that'll be pretty interesting. The first solar eclipse of 2023. All right, let's get a move on then and find out some other stock strategies as well from our chartists as we're gearing up for the market open, given the fact that the pre-open rates for now are holding out at around 17,600. The handover as well from Wall Street and Asia was fairly tempered, and the SGX Nifty indicating a bit of a flat start. Naresh, you've spoken about some of those stocks within the hospitality space, but if you could extend it and give us your views as to how you're looking at retail as a theme. Are there any stocks that are standing out according to you on the charts?
So not really. Apart from trend, none of the other names actually show any positive trends as of now. A lot of these stocks have corrected quite a bit, whether it is ABFRL, Shoppers Stop, or other names also. So out there, trend is the only name which has been consolidating and holding on well. And last, say, roughly 2 weeks, the stock is in a flag formation between 1330 to 1380 levels. If it can cross about 1380, that would be a breakout and a move towards 1500. So that's the only name which looks interesting. The hospitality space looks more interesting, which is where we are seeing breakouts happen. So you have Oriental Hotels which is closer to a 52-week high. Lemon Tree is breaking out. Kamath Hotels, a small name, has hit a new 52-week high. Indian Hotels is trying to make a breakout move. So there is a whole basket of hotels which looks more promising at current levels.
Rani, we are going to pass a rule here that you are not allowed to speak about Indian hotels or hotels. And Kunal cannot speak about Tata Motors. Every second day, Tata Motors or Indian hotels. Let's talk new names.
To be fair, today he said Lemon Tree, at least. That
hotels, I'm making it that as a criteria. Naresh, anything else apart from hotels?
So as of now, it's more stock specific, but banking is a space which I'm watching out for. So the worst name which has been in terms of performance is HDFC Bank, which could be the going forward stock which could surprise. This is the fifth attempt at 1700. So the next time it crosses 1700, 1730. And the reason to look at HDFC Bank is that can create a trend for the index as well, which is where we are struggling in terms of momentum. So HDFC Bank is on the top of the radar if it can cross 1700, 1730.
Okay, let's take a look at the index calls, not hotels, not Tata Motors, but what is Kunal and Naresh's consensus, if at all, on the index? And both are saying it's a buy on dips. Kush Bora, though, is saying that it's a hold. That's their Nifty call this morning. So pretty much unanimous, at least from Kunal as well as Naresh. And clearly tilted in favor of the buy for the Nifty. What about the Nifty Bank, though? It's a no trade for Naresh. Kush is saying that it's a hold. And Kunal is saying it's a buy on dips. Naresh, why a no trade on the Nifty Bank?
So to be fair enough, what happened is booked out a little too early on Bank Nifty and have not been chasing after that, waiting for a decline, which has not really come up. So we did not get much of a dip. So at these levels, the risk reward is not great for a fresh trade. So if I did not have a buy before, it's difficult to have a hold. So waiting for a dip or a fresh breakout going forward. So it has outperformed the Nifty as well.
All right, there you have it. That's the view coming in. Meantime, Kunal, what's your outlook then on where you're seeing opportunity within the entire PSU space? A lot of these rail stocks, defense names as well. Is there anything that's cropping up on your radar?
So from the railways pack, Titagarh Wagon was one of the stocks which we've been bullish on. So I would continue to be bullish on the stock, even at the 250 plus mark where the stock is trading. I think it's a very strong chart. It's moved on to those higher levels in a very smooth and a gradual fashion, breaking past about the 179, 180 mark here, I think in the fag end of 2022, and then scaling up gradually higher on a consistent basis. From the other defense pack, I think HAL and BL are still the two prominent names which I'd be consistently bullish on. BEL specifically, when the stock has had given that correction, retraced back towards the 200 DMA around that 91, 93 odd mark, and then from there the stock bounced off. Same would be the case with HAL. So both these stocks are looking attractive, and I think both of these stocks would probably be a very good value buys even at current levels.
Right. Okay, that's the take coming in on HAL and some of the other interesting names. Just revisiting some of the other, stocks which would be reacting to the news flow in the pre-open rates, and just a very meager move coming in for the Nifty as well as the Sensex right now. Let's see what Tata Motors is up to and whether that has reacted to that huge capex outlay of 15 billion pounds which JLR is looking to put in next 5 years. Tata Motors is holding up 1% higher when it comes to the pre-open rates. What's Ultratech up to? Because they also are looking at commissioning that 2.2 MTPA brownfield expansion in Bihar. Ultratech Cement holding out 0.7% higher. NBCC, they've bagged a 208 crore rupee order from PWD Puducherry. So that's another stock which is going to be in focus. 2% gap up for NBCC. Mastech should be reacting to its numbers. The constant currency revenue has come in higher by 5.3%. Margin expansion of about 40 basis points on a sequential basis. Some relief at least after what we've seen from TCS and Infosys. Mastech has gapped up 5.25% in trade. Oro Pharma as well. It's got a US FDA nod for one of the drugs which was used for pulmonary diseases. The treatment for that. Oro Pharma, though, is not really seeing much of excitement, 0.6% higher there. Bank of Maharashtra looking at a sizable fundraising as well of about 7,500 crore rupees. And that's another stock which is going to be in focus. And then some disappointments as well by way of earnings. First, Tata.com, wherein the EBITDA has come in lower by about 1%. Margins have declined 200 basis points sequentially. Tata.com is down 1.25%. ICICI Securities as well. Poor numbers there. Margin contraction of 100 basis points. EBITDA down nearly about 3%. So that's another stock which is also in focus. Alcoa, of course, has maintained their 2023 shipment guidance. So look out for a rub-off on what you may see on Hindalco. And that's pretty much the picture that you're seeing when it comes to earnings. There's ZEC as well, which is also in focus. Malaysia court has dismissed the company's appeal in PY3 offshore field issue. So that's another stock which we're going to be looking out for in trade. But getting all set for the opening bell then this morning, we're looking out for the cues from this. Remember, the Nifty has fallen for a third consecutive day on the trot. IT continues to be the biggest sore point, while metals have been gaining ground for the 9th consecutive session. So let's see whether metals can actually push up higher. What we're actually seeing in the market is, while IT is lagging, pharma is not. So a bit of a diversification when it comes to the defensives, when you're seeing good performance come in from pharma off late. Just marginally higher, skirting around that 17,640 odd level for the Nifty, flat for the Nifty IT index. The Nifty Bank flat there again. I don't think we've seen such a flat and quiet start in many days to come. There's not any movement on just any of the indexes. Let's see then what Tata Motors is up to and whether that stock is getting excited after that JLR capex announcement of 15 billion pounds. Tata Motors is also very, very quiet, just marginally higher, 0.3%, 471 thereabouts is where that stock is. Ultratech as well, the expanding capacity by 2.2 million tons. Brownfield expansion, that is, in the state of Bihar. 1% higher for Ultratech. Oro Pharma, they've got a US FDA nod for one of the pulmonary disease treatment drugs. Mastech has come out with good numbers and definitely away from what we've seen from INFI as well as TCS. So cheering up higher by about 3%. There's Bank of Maharashtra, which has announced a sizable fundraise, which they're going to consider on 24th, along with their numbers, 7,500 odd crore rupees. That's another stock which is in focus. But weak numbers from Tata.com, weak numbers from ICICI Securities as well. So both those stocks actually should be lower. Let's see what the big buzzers from yesterday are up to, because yesterday turned out to be a good session for some of these OMCs for sure. Both HP, BP held out very smartly. Sugar, of course, has been in a very sweet zone. Yesterday was no different. You had Balrampur Chini hold out by about 2.5%. And I'm only picking up Balrampur because that's the most actively traded one and within the F&O gamut. But yeah, TVS Motors, BPCL, Jindal Steel, these were all some of the active performers in trade yesterday. Today too, actually, pretty much that trend is continuing. But for the index, it's pretty much a no-go right now. Naresh, hi. Very quickly, what do you make of this absolutely flat start that one is seeing?
So continue to expect same things to continue, wherein we get into a range wherein a dip is a buying opportunity. Apart from that, be stock specific. So nothing really to make out of it, and this is something which should continue for next few sessions as well.